I will be opposing this nomination and why I encourage my colleagues on both sides of the aisle to do the same. This nomination, Mr. President, is not one of the many go-along to get-along nominations that we do so often right here in the U.S. Senate. This is a nomination that will have a direct effect on our constituents' pocketbooks, and it demands, I believe, our serious attention today. Carol Galante has been the acting Assistant Secretary and Federal Housing Commissioner at the Department of Housing and Urban Development since July 2011. Therefore, this nomination vote, in a sense, will serve as a referendum of sorts on the current management of the Federal Housing Administration. Mrs. Galante, in her role as acting FHA Commissioner, has failed, Mr. President, to take serious actions to shore up the solvency and prevent a taxpayer bailout of the Federal Housing Administration that we know as FHA. The latest actuarial report shows that FHA has a negative economic value and a taxpayer bailout is most likely. Despite these warnings, FHA waited until April of 2012 to raise additional premiums, and Secretary Donovan, Secretary of HUD, has testified to the Senate Banking Committee that it will wait until next year to increase premiums by a meager 10 basis points, despite having statutory authority to do more to protect the taxpayer. Ms. Galante has denied the true severity of the problems at the FHA. In a New York Times piece last year, Mrs. Galante said, and I'll quote, "There is no evidence or widespread prediction that home prices are going to decline to the kind of levels that would require a bailout." Really? Yet, although some prices have risen slightly, the FHA's financial position continues to deteriorate. Several experts now conclude that a taxpayer bailout is simply a matter of time, Mr. President. The 2012 actuarial report and the disastrous state of the FHA's finances led the Washington Post editorial board to conclude that, quote, "Right now the critics are starting to look pretty pressing. Affordable possession of one's home is the American dream. Government support for excessive borrowing has turned into a national nightmare." The FHA's capital reserve is still well below the level determined by Congress to be the bare minimum to cover FHA's future losses. Even though FHA narrowly avoided a bailout this year, dangers remain in the years ahead due to its over $1 trillion, Mr. President, exposure to risky loans and precarious economic conditions that we have. Most of the FHA's recent actions have only concealed these dangers. For example, instead of adequately raising insurance premiums over the life of the loan, FHA has increased upfront premiums to simply cover losses in the short term. Also, upfront premiums can be rolled into the mortgage principal balance, thereby decreasing equity for borrowers who in most cases have little equity to begin with. Increasing the upfront premiums could make FHA loans even riskier for both the borrower and the taxpayer who stands behind the mortgages. I believe it's time to face the reality that the Federal Housing Administration is dangerously undercapitalized, and because of the lack of serious reform, FHA teeters on the brink of a bailout, as I've said. Andrew Kaplan, a New York University economics professor, said, the FHA, are doing very badly. There's no two ways about it. Over the next 5 years, there won't be enough of an economic recovery to fix FHA's finances. Not a chance. A study by a Wharton professor estimates that an FHA bailout could cost between $50 billion and $100 billion, and warned that only a quick and substantial economic and housing market recovery can avoid substantial losses for the American taxpayer. Data from the actuarial report shows that the serious delinquency rate for all FHA loans is 9.6%. The delinquency rate for loans originated in 2006, 7, and 8 are between 20 and 30%, Mr. President. Approximately 739,000 loans are seriously delinquent, an increase of over 100,000 homes from last year. If the borrowers of these delinquent loans all default on their mortgages, it would result in a $57 billion in claims to the FHA. We hope that won't happen. The FHA's latest quarterly report shows capital resources of $32 billion. It also states that cash flow from operations, which largely consist of premium revenues, covered only 80% of net claims last quarter. The latest actuarial report, 2012, confirms that FHA's finances are dramatically worse than last year. Mr. President, FHA's capital ratio has gone negative for the first time since 1991, and the economic value is in excess of a negative $16 billion. Last year, the report projected a $9.4 billion value, representing a decline of $24.9 billion. FHA's delinquencies continue to rise, and high loan limits keep FHA's role in the market very broad. The projected loss on outstanding business is an all-time $39 billion. FHA is leveraged 422 to 1, Mr. President, 422 to 1, and has a sparse $2.55 billion equity cushion on its over $1 trillion portfolio. Think about it. FHA has underestimated its loan losses every year for the past 3 years. In addition, since the Treasury Department already has called permanent and indefinite authority to provide funding for the FHA, a bailout of the FHA could occur without, as you know, Mr. President, any congressional vote. This is not a vote today to determine whether you support the President or not. This is also not a vote to determine whether you can work in a bipartisan manner. I think this is a vote to determine whether you support the American taxpayer. Mrs. Galante has demonstrated, I believe, her inability to identify the multitude of problems at the FHA, and I believe it's incumbent upon us, on behalf of the American people, the taxpayers, to reject this nomination and demand real reforms at FHA and a nominee who represents and appreciates the urgency of this situation and a willingness to address it. Mr. President, I yield the floor.